Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a session where we are seeing profit booking continue for the Nifty. So it's down around 20 odd points, and we have the Midcap index, which is down around 125 odd points. If you're talking about specific stocks, there's a lot to talk about when it comes to the oil marketing companies. So all of them under pressure on account of the crude prices spiking overnight. And besides that, we also have the rupee weakness, which is probably aiding sentiment on the downside. So BPCL, HPCL, IOC, all of these stocks down and out in today's trade, and a couple of other stocks stand out, something like an M&M, and from the broader market, Salora Active, which is listed, and even something like a Manpasand, where the board meet is today for the Q4 numbers. Hi, Prashant. News never stops.
News never stops, and we'll spend time on Fortis over the next hour or so talking about it. Lots to really take in, but the market, I have to point out, is looking very, very weak. I mean, and this was true yesterday as well. The index closed kind of flat. And it outperformed what other indices in Asia did, and it's been true for the last couple of days. But the Nifty is being held, supported by just a few names like TCS or HDFC on an odd day, etc., etc. But beneath the surface, I mean, the damage is real, and you only have to look at the declines to advances ratio. 1,500 stocks lower, 500 stocks higher. It was pretty similar by the time we shut shop at 3:30 yesterday as well. Sudarshan is with us. Sudarshan, good morning. Thanks very much. Would you agree with that assessment? And also, what would you do with the Nifty?
Yes, good morning again. See, the view is that this trading range is likely to break on the downside, which means that, yes, I agree with the assessment. It may not happen today, it may not happen tomorrow, but the theme seems to be that 10,700 support will get broken and the Nifty will go into a much larger correction. Now, before that happens, surprises can come in. We can actually rally above 10,800, go to a little higher level, but eventually, I think we are looking at a correction ahead. So today and tomorrow, because of the expiry, a lot of drama can happen, and I cannot predict that. For today, for traders in the Nifty, the best trade is not to do anything because the markets have become completely random for the day.
What would your stocks be?
Well, primarily on the sell side, Amar Raja is a short sell. The stock had a rally, and that rally fizzled out. Since then, it's been coming down consistently and regularly. And the second short sell is Cummins. Cummins is in a bear market of its own. It entered a bear market when the Nifty was rallying. So weak stocks become weaker when a market correction starts. Cummins and Amar Raja are short sells, and Infosys for today is a buying opportunity. Tech stocks are relatively cheerful. I think we should go there and see what happens. So one buy and two short sells.
Okay, Sudarshan. Well, we don't have time for Twitter queries today, so we're going to try and postpone that for a later time. But thanks very much for joining in and talking to us. So those are some technical calls coming in. Yogesh Mehta joins in with some F&O strategies. Yogesh, if you could just list out your calls for us today.
Yeah, sure, Ekta. Since Nifty is trading in a narrow band of 10,700 and 800, we are watching out for both the stands. We are recommending buy on RBL Bank. Currently it is quoting at 566, keeping a stop loss of 555. Target could be in the range of 588 to 590. The other one are short. ACC is a short side. 1340 is the current price in future segment, keeping a stop loss of 1360. Target could be in the range of 1300 and below. And the third one is short sell on CX. Current price is 1292, keeping a stop loss of 1320. Target could be in the range of 1340 to 45 levels.
All right, Yogesh, thanks very much. Appreciate you joining in with those trades at this point in time. 17, 18 points lower on the Nifty. No big change. We've been ranged now for what, 10 days in this 100-odd point range. On to a CNBC TV18 exclusive. We've been tracking the IDBI bank story for weeks, and this is now Sapna Das getting us the inside story in terms of how the government is thinking on about this particular issue. IDBI, and LIC. How will this really work? What is the government's rationale? Sapna, good morning. Take it away.
Hi, Prashant. So in continuation of what is being reported so far on this development. Basically, the sense that CNBC TV18 has got from various government quarters is the fact that, there's a very clear-cut logic and rationale for LIC to come in as a strategic investor in the bank. We understand that, it's been some time since the board vision of LIC has been, to have a competitive financial conglomerate, and probably one of the central themes for the insurance giant is that all financial services should be provided to the customer under one umbrella. So keeping this in mind, probably this entire development is panning out. The second clarity, of course, is that, and this is something we had done yesterday as well, but just for reiteration for our viewers, basically the bank will be a subsidiary, not to be merged in LIC. That's obvious. And LIC already has other subsidiaries in financial services, like LIC Housing Finance, Mutual Fund, Pension Fund. These are running pretty efficiently. So a very clear-cut message signal coming in that, as a strategic investor, the entity will continue to function as a subsidiary, just on the lines of their other arms. The third aspect, of course, and this is what probably the rationale works out to, something like, say, reducing the operation and the distribution costs significantly for LIC, that may come down. Diversification and deepening of distribution, things like that, Prashant. It's a clear-cut plan from the government's end to basically push through this deal. And last but not least, the logic that has also been stated is that if you look at the global insurance giants or even the global banks, many of them have gone ahead with this kind of formula. So, India cannot be an exception. That's the line that's coming in. And let's see how this development takes shape. The deal has yet to get a formal nod. Okay.
All right, Sapna, we're going to keep coming back to you for this developing story, but just want to put it into perspective. IDBI Bank currently close to its 52-week low, which we had seen last in 2017 at around 50.25 rupees. So just about close to those levels for IDBI Bank. But now let's cut across to Shireen Ban, who has with her the newly appointed IT body president of NASSCOM, Debjani Ghosh. Shireen, over to you.
Well, thanks very much, guys. The IT sector indeed has been one of the outperformers of FY19. In fact, in 2018, the IT index has seen an up move of about 25%. This coincides with the fact that NASSCOM, for the first time in its 30-year history, has a woman at its helm. Debjani Ghosh, an old-time Intel hand, has taken over at NASSCOM. Debjani, congratulations, and thanks very much for joining us here on CNBC TV18, your first interview since you took over. So it's an absolute pleasure. Let me start by asking you about the outlook as far as the sector is concerned. The NASSCOM guidance for FY19 at about 7 to 9%. This is higher than the 7 to 8% that you had guided for FY18. Do you continue to feel that the sector will be able to deliver on this, given what you are seeing today?
Yeah, the most exciting thing about this industry right now, in the sector right now, is that we have ahead of us opportunities that we have never seen before. Technology is today pervasive. It touches everything. It touches every single industry. It touches every single country. It's shaping not just the future and destiny of companies, it's shaping the destiny of countries, of nations. The need for services, tech services, the need for tech solutions, the need for IT to get integrated into your business strategy is tremendously high. We've never seen anything like this. I'm a strong believer that the opportunities ahead of this industry it's just tremendous. It's game-changing. It can rewrite this entire industry. Now, of course, in order for us to leverage these opportunities, we have to transform. Status quo is not going to cut it. We have to transform. We have to reinvent. We have to disrupt ourselves. So the industry is going to go through a process of transformation. It's going to go through it's going to go through a tough time in terms of transforming itself. But I think this industry is going to come out of it even stronger than what it had before.
So what do you anticipate? You said that it is going to continue to be tough times for Indian IT as they try and pivot themselves into much more digital services. You know, how long do you expect that transition to take place? And B, you know, what kind of investments are we talking about? When we talk about reskilling, for instance, which is going to be the #1 challenge as Indian IT moves towards this digital service model, what is the sort of spends that we're expecting?
I mean, first of all, I don't think I can predict when the transformation is going to end. But this is a mega transformation, right? And we are seeing the changes happening as we speak. We are seeing companies change their business models. Today, I mean, I'll go back to 2016. I think the digital revenue, which is coming from the new business, was around 14%. Today, the digital revenue has crossed 20%. We expect it to go to 38 to 40% in 2025. Right. So it's going to happen, and it's going to be the challenge is going to be the balance between legacy and new, because it's an and story for at least the next few years. So how do you balance that, and how do you ensure the legacy does not come in the way of the new?
Right.
So I think that's the huge challenge. Every single company today, IT company, is going through it. Global IT company, not just the Indian IT companies. Everyone is going through it, and everyone is figuring out for themselves what's the right balance. If you look at it, there are three things that's gonna pretty much shape success, right? First is talent. And talent is going to define your competitive advantage in the future, and there's no doubt about it. So talent is going to become critical. You talked about the investment in skilling. I don't have an official number to quote here, but I do know that every single company pretty much has made a job one. Okay. It's one of their biggest priorities. The second thing that you will see is capabilities in new technology. You know, interestingly, Shireen, if you look at some of the data that NASSCOM talks about in its strategic review, the growth in IT services now is being driven by growth in bundled software.
Okay, we will sort of dip in back into that interview as it goes along, but that's the first ever interview for the new NASSCOM chief to CNBC TV18. Some of the commentary at the bottom of your screen. 16, 17 points lower on the Nifty at this point. I just want to quickly highlight what's happening with Jayaprakash Associates. It's down 7% now. I mean, that's a big cut. It lost about, I think, 4% yesterday by close. It's down 7.25%. So basically giving up almost all of the uptick that we see in the preceding few days, the last preceding few days or so. I mean, so that's what's coming through there. More commentary on stocks coming up. We slip into a very quick break. Up next, the conversation moves on to Fortis.
Welcome back. Well, Fortis continues to be in focus because of the Q4 and FY18 numbers which were released yesterday. Plus, there was no audit report which was actually signed off this time round. We understand from sources it could be because of additional technical information that they want. But nonetheless, there's a lot which is going on along with the investigation report from Luthra and Luthra, which was out yesterday as well. To talk more about this, we have Amit Tandon, the MD of IIAS, joining in on the phone line. Mr. Tandon, hi. Thank you very much for joining in. So what worried you more from the Fortis numbers? The fact that the auditors didn't sign off on it, or, the Luthra and Luthra report findings?
Look, I guess the first thing is that, if there is some kind of semblance of a report which is out in the public domain, it is sufficient basis on which the bids can come in. If you recall, the bids had been postponed because the financial results were not available and the Luthra and Luthra committee report was not available. So therefore, this is a welcome step, just the fact that it's out there. The other issue that it's not signed, of course, is something which is worrying, because one is whether it's on account of technical factors or whether there is something which the auditors are uncomfortable with and therefore are not willing to sign. It's not something which we know at this moment. I guess clarity on that will emerge only over the coming few days.
Okay. So what do you think the logical steps for the board would be here on, according to you?
Look, I think that what they should do is engage with the bidders and try and get one of them on the table with with a bid. That is something which will help the company put a lot of its problems behind once you've got the new management. And my sense is, even at this stage, if the auditors have not signed on account of either they're not aware of something or a technical, that's something which would be getting priced in at this stage in terms of the bids which come in. So I think for the board, the most important thing is to ensure that there is a credible bidder on the table at this stage so that they can move forward with the sale of the assets and the business itself.
Just to take that point forward about the final bids coming through, that's expected probably by tomorrow or maybe even delayed as per Nisha sources to the 29th of June. Whatever the case might be, do you think that the bids would be impacted because of what we've heard from Fortis last night?
Certainly, they will be. To a certain extent, they would be. But the question to ask is that, look, given what has happened in Fortis, is the brand really that valuable that the promoters have put a value? They're quite welcome. If I were on the other side, I'd say, okay, take your brand and stay with it. We really don't need the brand because it's kind of gone through. It's kind of gone through a lot of damage over the last few months. And again, whether it's with a transition, without a transition, that needs to be seen, because some of the brands which are there, with at least one of the bidders, Manipal, that is a fairly strong brand. I'm sure IHH.
The brand issue, Amit, is a different, is one separate aspect. What I'm asking is that, you know, with regards to the fact that the auditors haven't signed off on the numbers, as well as, say, the investigation report findings. I'm sure that the bidders were aware of these kind of things and they have had separate meetings, etc. But do you think that the auditors not signing off is enough of a red flag for them to probably change their bids, revise it downwards, or maybe even step out?
Look, I'm not sure whether stepping out, again, I don't know. And it's a question of what is it. So just to take one of the things which is there. So do you show how do you classify the amount which has been given to, the promoters, the erstwhile promoters? Do you show it as a loan or is it classified as a fraud? Now, it's a technical thing. If you show it as a loan, it has different implications. If it is treated as a fraud, it has different implications. And therefore, at this moment, sitting outside, we don't know what the exact nature of the concerns the auditors have at this stage. And whether they have, whether they're being able to quantify it or whether it's just something which is linked to the process at this stage.
Okay. All right, Amit, we're going to leave it on that note. Thanks very much for joining in. I'm sure we're going to have more conversations as things develop for Fortis. That stock just about flat and has been, reacting to any sort of big news pieces. You either see it recover or it just is absolutely flat to the news.
But I think hopefully this dire sordid saga is now coming to some sort of a close, winding down, hopefully. All right, we take a very quick break here. The market is down 20 points. By the way, advanced decline is worsened further. 1550 stocks are lower compared to about 460 stocks which are higher. So, even from 20 minutes back, the advanced decline is worsened. We take a very quick break here. We'll come back. We discuss what's happening in the commodity space. Oil saw that big spike. It's affecting the rupee. It's affecting bond yields.